Hi, Ruma.
Hey, Fiona.
Yeah, so our last session, you were telling me about the fundamentals of borrowing. So, yeah, you said you were going to mention details on LMI.
Okay, so you want to talk about LMI today?
Yes, please.
Okay, all right. So let's start with the LMI. So LMI is basically, as the name says, lender's mortgage insurance, right?
Yep.
So that's an insurance for the lender. When does it apply? So whenever a borrower borrows more than 80%, the lender mortgage insurance fee kicks in. Now, you ask me why. Because let's say I'm giving you a loan. I'm a lender. I'm a bank. Yeah. So obviously it's a risk. Yeah, it's a risk management, factor basically. So if I give you more than 80%, I will ask you to pay the fee. So I have to get the insurance from. By the way, there are only two parties in Australia, primarily two parties who do the lender's mortgage insurance, which is Genworth and QBE.
Okay.
Yeah.
Yep.
So these are the two third parties who can offer insurance on the loans. Yeah, to the lenders.
Okay.
Most of the lenders they get their insurance from there. Otherwise, there's I think a couple of banks they've got their in-house insurance as well.
Yep.
Yeah. Okay. So when a customer borrows more than 80%. The lender then asks the customer to pay for their insurance. So it's lender's insurance, it's not customer's insurance.
Yeah.
But it's a necessary evil, you can call it, because you have to pay for their premium if you're borrowing more than 80%.
Yeah.
Okay. Now the next question is, how does LMI get calculated?
Yeah.
So there are primarily two factors. One is your loan amount, and the other one is your LVR, loan to value ratio. So let me give you just the basic formula behind that. So let's say you're borrowing 90%.
Yep.
And your loan is up to, so there are brackets like 0 to 300K or 300K to let's say 500K or 500 to say 750. And 750 to 1 million and so on and so forth.
Yeah.
Right? So then with this formula, then you calculate the 90%, this is the whatever the ratio would be. Let's say it's 1.2%, just throwing the figure there, yeah?
Yep.
So let's say the fee is 1.2% for 90% loan within the bracket of 300, like maximum loan amount 300. Then the formula is that you take the loan amount and times that by 1.2%.
Okay.
That gives you LMI, but then there are calculators, proper calculators on the website, so you don't have to do it manually. Each bank has their own LMI calculators as well, and there are certain banks for the first home buyers or for the owner-occupied property, they give some sort of discount on that as well. So it's all very relative. Yeah, you can check that as well. Okay, so this is how LMI gets calculated. Now, there's very important point which I was trying to make last time when we were talking about the fundamentals of the loans, how the borrowing capacity and everything gets calculated. So what happens is, let's say you've got 95% loan. So your property value is 100. Yeah, $100, and your loan is 95%, right? So that means your deposit is how much?
5%.
5%, exactly. So this is your deposit. So now you have to calculate LMI. Let's say a client comes to you and they say that I just have the deposit. This is funds to complete. Now watch it very carefully, yeah? So remember 4 types of cost in funds to complete. One was deposit. Second was stamp duty.
Stamp duty.
Third was LMI, and the fourth was miscellaneous. Miscellaneous, which is let's say 2,000-3,000. Everybody has that, so up to 5,000, right?
Yep.
Now deposit everybody has normally, meaning like if they're getting into property market, they normally have 5% at least.
Yep.
Stamp duty, of course, you can't get away with that.
Yeah.
LMI, sometimes clients just have these two funds for these two, but they don't have funds for LMI.
Okay.
So in order to help those clients, what we do, we say we've got a few products where you can add LMI on top of 95%. So they don't have to come up with the funds for LMI. They just have to come up with deposit and stamp duty. They don't have to come up with the funds for LMI. So what we do is we then choose the products out of those 4 lenders. I think there are only 4 lenders who offer 95. And by the way, this is only for owner occupied. I'm not talking about investment.
Okay. Yep.
So for owner occupied, we could go up to 95 plus LMI. Some say, okay, we're going to give you 98. Some say 99, and some cap the whole LMI on top. But their policies are very, very strict. So you have to remember which bank we are going to, and just like that's something different training. We can probably do the next training on those. What products, what banks offer 95 plus LMI, and what are their policies. Okay, so this is one way of now. Whenever sometimes I've seen a generic a general question from the customers, they say, oh, so you're going to give me 95 including or excluding LMI. When I say 95 LMI on top, which means that it's not inclusive of 95, it's excluded, meaning LMI as a person, let's say their LMI is 40,000, for example. So 95% loan plus 40,000 will get, the repayments will be over 30 years on the total loan. So when you calculate the borrowing capacity, make sure that you include this also, because that's part of your loan.
Okay, yep.
So the borrowing capacity is not just on 95, it's on the total loan. Repayments are not just on 95, but it's on the total loan.
Yeah.
So make sure that you remember that.
Okay.
Now, second option, there are certain banks, they say that we're not going to add LMI on top, but we will include the LMI within 95. So that is called inclusive LMI. Now, what does that mean? This means that bank will only give you $95 loan for a purchase of 100. They're not going to put another 10 or 20 for the LMI to give you the loan. So then what's the moral of the story? That means that you have to come up with 5% deposit, normal, because it's 95 loan, right? You have to come up with stamp duty, let's say 4%, which is normal, because it's, if you're not first home buyer and you're not buying less than 650. The LMI you have to come up with as well. Why? Because bank is only going to give you 95. So somebody has to pay LMI. Obviously the customer has to pay LMI, right? Now, saying that, the bank takes the LMI fee out first at the day of the settlement. So they will go minus and they will give you 93%. Let's say LMI is 2%. Let's say 2%. So they will give you 93%. This is called your base loan. And this is on top LMI, total loan. So it's a bit technical, but when you slowly start to do these figures, you'll understand, So one is including LMI, which is maximum 95%. So just like, it's common sense that if bank is not giving you more than 95, whatever the extra cost outside of that, borrower has to come up with. And what is the extra cost? 5% deposit, stamp duty, LMI, miscellaneous. So whenever a customer says that I don't have enough money for LMI, always give them 95 plus LMI, not inclusive LMI.
Okay.
This much you remember? Yeah. So that's one formula you have to remember. Another thing you need to remember is that LMI only goes, above and all that for owner occupied. For investments, they don't do more than, some banks don't even do more than 90%, but there are, I think, 1 or 2 banks who can do 95%. So 1 or 2 maximum. Okay. So these are things you need to remember for LMI. Apart from that, some people can pay it up front, but I prefer that they put it on top, because cash is king. Ask your customer to keep the cash for future, emergencies or something, unless they have plenty of cash. If they want to keep the cash, then ask them to put the LMI on top of 95%. If they've got plenty of cash, then let them pay LMI up front. And there's no rebate on LMI. Very few, I think. I've seen maybe once in my experience in 15 years rebate, but normally they don't, give it back. Basically, once LMI is gone, it's gone to the bank. Any questions? Anything else you want to know about LMI?
No.
Yeah, it's
That's
all
all.
clear.
Thanks. Yeah.
All right. What maybe for next time then we can discuss about what sort of properties and how much LVR for LMI and things like that. We can go a little bit deeper into that.
Okay.
Thanks.
Thanks.